What's up? Happy New Year's to everyone. I'm glad you guys made it. This is my New Year's gift, also my Christmas gift to you guys. So I'm gonna make this video, and if you never invested before, this will actually put you on the right track. I'm not going to tell you that I'm going to give you every single thing in this video, but I am going to give you the blueprint. So you will may have to look into, a little bit of research on your own. But for somebody that never traded before, this is the overall blueprint on how you can make money. And really, if you're smart, this is video is all you need, right? I took down the other video that I made, and I'm sorry if you guys didn't get a chance to see it. Um, but for those of you that did see it, I took it down, and the reason why is because somebody that did not even like the video or nor subscribe, I kind of saw it on their channel, So I'm like, dang, like it haven't even been, 2 weeks, and like people are already stealing stuff. So, and I don't think that's fair. So yeah, I kind of took it down, and now I understand why people actually sell courses and stuff like that. I never wanted to do anything like that, but don't you take what I'm giving you and monetize off of it. That's not fair. All right. So with that being said, I'm gonna go ahead and I'm gonna keep this up. I mean, this is a great video. It's not gonna make you as much money as the other video that I made. Plus, that was a forex video. This is an options video. I do a lot of forex videos. Matter of fact, I think this is the first option video with the stock market. So y'all enjoy this. Before I get started, this is not financial advice. If you're looking for financial advice, please seek a financial advisor. All right. With that being said, let's go ahead and get into it. All right, so if you never traded before, or if you have traded before, and you were always targeting $500 a day or $1,000 a day, if you're ready to change your mindset, right, in 2022, and you're ready to get rid of the get rich quick mentality and just grow your account over the years until retirement, you can still walk away from your job, in 5 years or so. All right. But you're not. I mean, with a formula like this, you shouldn't be working until you're 60 or 50 or whatever. Well, depending on your age, right? But this is definitely, if you work towards it, this could definitely put you at seven figures, in 5 or 6 years. No lie. All right, and plus making contributions on your own as well, as far as when you get paid, you're saving money, you're putting it into the market. So with some of your work as well. But let's get started. I don't want to make this video too long. So what you're seeing up here now is some writing or whatever, and then you see, 26.5%. All right, so what I'm gonna show you guys is from January the 4th until the end of December, right? So for the end of December, the SPY, which is the S&P 500, this is an ETF of the S&P 500 that a lot of people trade. They call it the SPY, right? Spider, because there's 500 different companies up under one sector, right? So a lot of people call it the spider, but it's the SPY. Okay, so from January of 2021 to the end of January 2021, the SPY made a 26.55% return on its ETF, right? It went up 26.55%. All right, now this is a calendar, it's different from the 52 week. So if you're looking at a 52 week, it might be a percent off. All right, so this is strictly calendar year. All right. All right, so with that being said, what I want to let you guys know, if we repeat the same cycle next year, for 2022, if we start 2022, the first trading day of 2022, and end 2020, 2022 with 26.55%, like if we repeat the same cycle, this would be your returns, right? If you purchase a 1 year contract whenever the stock market opens again, which I think it might be January the 3rd. So if we were to repeat the same cycle and you were to buy a 1 year option contract and it ends like this, you will be up for the year 2022, 337%. That's based off a $500 strike price. All right. And a 2 year option contract would get you about 175% minimum based off a $500 strike price. Now, these contracts are going to run you, uh, about 2,300 for a 1 year contract, and about $4,000 for a 2-year contract. Now, these returns may differ. If you guys trade options, then like it's probably going to be different, right? Because as soon as your contracts get in the money, then the math just start getting different. So I may be telling you guys the minimum as far as the 337% or the 175%, but you can end the year easily at 500%, off a 1-year contract or more. This can end the year, about 200 and something percent, almost 300. I mean, it's just the math is just different when you're doing options. All right, so let's talk about what an option is for you guys that don't know. For you guys that do know, you may want to skip the next 30 seconds because I'm not going to sit here long, but I will bring a calculator out. All right, so say for example, right now the SPY, if you wanted to buy the SPY, you'll have to spend $474.96. All right, per share, right? It'd be 474.96. So say if you wanted to buy 100 shares, and this is why a lot of people don't like to invest in the stock market. They think it's too expensive, you know. And if you're looking to invest with a little bit of money, then you're trading penny stocks, and penny stocks are volatile, and a lot of the companies are not good companies that's been around for a while, right? So a lot of people stay away, but I'm gonna show you guys that you can actually afford with options to invest in the stock market on some decent, good companies. So if you were to buy 100 shares of the SPY, then you will have to spend about $47,496 right now. All right. So what does that mean? All right. So that means that uh, if this thing was to go 26.55% again, right? That's $126 that you would make off of each share that you actually bought. So you bought 100 shares. You're going to times that by the $126 that actually went up. That's your profit. So you would have made $12,000, $12,600, right? It is what it is. If this pattern repeats itself, or if that, that's what you'll make, 12,600. But if you were to buy, say for example, a 1-year option, which is $2,300 for each contract, I mean, and you would have invested that $47,000 that it took you to buy 100 shares. Let's just call it 47,000, right? And you can times that by 337%, right? So for the year, the math is just a little different, as you can see, right? So not only are the options will bring you back more on your investment, but it's more affordable. It really is. It's more affordable. So just keep that in mind as well, right? All right. So in this example right here, right? Um, so an option pretty much is more affordable than buying shares. You get more return on your money. All right. But the pros and cons. All right. So the pros is what I just said. The cons is that if you pick a strike price, right? So this is based off a $500 strike price. So that's saying the market opens up right here, right? January 3rd here, and my strike price is 500. So I'm saying that the market would at least pull up 5%, right? We know that's gonna happen. Yeah, we do. All right, so this is my strike price. So once the market gets to my strike price, right, and keeps going, then that's how I get, a lot of the returns that I'm telling you guys about, the 300, the 175%. All right. But the con is also if we end the year below, you know, your strike price or where you got in at, then if your contract expire, then you lose everything that you actually invested, right? So you lose your whole investment. So that's one of the cons. Yes, it can make you a lot of money, but if the year end under, your strike price, and like you can lose all of your capital that you paid for the contract. So that's the cons. All right. But chances of that happening when you're playing long term is almost, I don't know, 10%. All right, versus you have a 90% win rate, in my opinion. 95% win rate when you're playing long term, right? A lot of people don't talk about leaps, right? Long term equity, anticipation, whatever it's called, but they don't talk about leaps. And these are leaps right here, right? So you can look up that definition as well. All right. So with that being said, man, what you will want to do, man, what I think would be a good thing and something that has been working for me is, I invest in the beginning of the year. I hold it for, a year and a day, because that helps you with tax purposes as well. So instead of, depending on how big your return is, you're taxed, the 20%, 35%, uh, but whenever you hold for a year and a day, then you're taxed like 15, 16%, something like that, your overall profit. So you get a tax benefit when you hold, you know, anything over a year. So keep that in mind as well. All right. Um, what else? What else? What else? What else? What else? So you guys understand this. Hopefully, this will get you on the right track to knowing that you can make money. Also, throughout the year, you can continue to invest and buy contracts, especially when you see a dip. Right? We saw a dip here. Let's just say May. Right? So in May, we fell about 4%. So on average, if the pullback is 3, 4, 6% at worst sometimes, then you can buy those dips. So when you're getting paid from your job, get money, set money aside, right? And then when the market dip, then you buy again. So instead of you just waiting on these returns, you're waiting on returns from the other contracts that you bought as well. That will expedite your, I like to call it, walk away from your job money. All right. Um, so let's get a calculator out and just show y'all how this compounded thing works. So say if you did buy an option contract for $2,300. If you have more money than that, congratulations, expedite your journey to freedom. All right, so if you got $2,300, right, and if you was to do, I'm gonna take the 37% off and just go with 300 just to keep the math even. So if you was to do that times three, right, which means that's 300%, all right, then your profit, right, for 2022 would be, I'm gonna write this down too to follow along with you guys because I didn't. I'm just freestyling this. All right, so your profit would be $6,900, right? Plus the $2,300 that you started with, right? So which would give you, going into 2023, which would give you $9,200, right? All right, so that's going into 2023, right? So for the year 2023, if we can return 300 more percent, that'll give you guys 27,600, right? Plus the 9,200 that you actually started with for that year. So at the end of 2023, that should be like going into 24, that should be your account balance, 36,800, right? Going into 2024. Okay, so at the end of 2024, right? If we make that same 300% again, plus the 38 that we started with, well, the 36,800 that we started with, all right? This should be your account balance, 147,200 at the end of 2024. All right. So going into 2025, we're going into 2025 with 147,200. Right. So we make 300% again. All right. That'll give us that plus the 147,000 that we started with. Boom. So at the end of 2025, we should have over $500,000, right? So going into 2026, we're going to 2026 with this amount, right? And we get that same 300%, right? It'll put us at 1.7, right? Plus the 588,800 that we started with for that year, right? So I'm gonna stop it right there. All right. So at the end of 2026, right, we should be at 2.3 million, right? $2.3 million at the end of 2026. Now, at this time, hopefully, man, it's only 4 years from here. Wow. All right, so hopefully at this time, uh, you guys found out how to make 300% in a year, right? You'll have experience. You'll kind of do your homework and find out what happens if the market start going down and things like that or whatever. So, um, you can squeeze 300% annually out of this market. I don't care what nobody say. Even if you want to be safe, because I know I told you, if the contract is not at your strike price by the end of the year, you will actually lose all of your investment. So if you want to be super safe, then do a 2-year contract. Like when the market fall, people, this is what I want to let y'all know. When the market fall, it bounces right back up, right? Like this was coronavirus right here. Coronavirus just started falling. Everybody started panicking and making phone calls. People that don't even know how to invest and never bought a stock before. Hey, it's a good time to get in the stock market. This during all this time right here. All right. But the good part about it, we recovered, right? Look at August. What happened? We recovered right here, right? So about 6 months later, we recover and we continue to move to the upside. That was the coronavirus. I'm just showing you guys like this is 2000, this 2018, right? From the old time how we fell. Boom. Right. That's when Donald Trump was placing sanctions on China and tariff. It was a trade war going on during that time, and man, he was sinking the hell out the market, right? All right. So, but we recovered from that, right? In April. So we still continue to move to the upside. So what I'm trying to tell y'all, when the market does dip like this, that money that I told y'all to save from your job, have it ready. Okay, have it ready, and that's gonna expedite your walkaway money, right? Because instead of just waiting on 1 or 2 contracts, or $5,000, $10,000 worth of contracts, how much ever you can afford, waiting to the end of the year, man. Look, you can get in right here. You can get in right here, on a pullback, and man, look at this. That's 37%, right? As of February. That's December, uh January, March, December, January. Is that 2 months? Wow, that's crazy. Oh no, 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 no. I'm sorry. That's a whole year. I'm tripping. So that's like a whole year and 2 months, right? Um, 39%. That's way more than this right here. Like, all right, so look, I'm just giving y'all some of this knowledge, man. People that have gambling mentalities, I just gave y'all a mathematical breakdown how you can walk away. So it's no use to losing money trying to make, $1,000 a day, $500 a day. I've done that. I made $2,000 a day, $1,000. I've done that, but man, you lose more than you actually win. So just grow the account slowly. And if you want to expedite your journey, again, whatever you do for a living, put some money aside. Just put it aside, right? Don't go out there and buy them new Jordans or that Cuban link, and some of this money people blow. I just don't understand it. You know what I'm saying? Like, $10,000 for a chain, or 20 grand for a Rolly. I don't know, man. You know what you can do? You can do with that money. If I just showed you what you can do with 2,300, within 1 year, imagine what you can do with 23,000. You know what I'm saying? 23,000 in 1 year. So just imagine, man. So, don't go out and be stupid and just waste money on dumb stuff, man. Like it's here. But I'm gonna end the video right here. If you have any questions, leave it in the comment section. I'd love to get back to you. And I appreciate you guys again for watching. Happy New Year.